All right, I think we're live. Hello, and thank you very much for tuning in. My name is Chris Brown. I'm the Director of Policy and Research here at the Common Sense Institute. This is our Common Sense Commentary series that we try to hold to give you an opportunity to ask questions, engage, and allows us to dive a little bit deeper and add a little bit more background on some of the crucial and impactful research that we're embarking on. Was hoping to be joined by my colleague Eric today, who really was instrumental in putting some of the research that I'll be discussing and going through the background and helping get the release out. But unfortunately, he wasn't able to join, so I'm stuck with my laptop instead. Me and my old friend, the laptop, instead of Eric. But I'm sure you might hear from him again in one of the coming series. So today's topic and discussion is surrounding the state of Colorado's Unemployment Insurance Trust Fund. We've featured discussions of the trust fund in 3 of our research releases over the last year, starting in April or March. I think it might have even been really at the beginning of the pandemic, and then through the summer as the state was debating and actually passed some significant reforms related to the trust fund's funding mechanisms and taxes that support. And then just in the last couple weeks, we released another report related to the trust fund's status and underlying funding status. So I'll get into a little bit more of the background and give you some highlights and really why we're focused intensely on this issue, but would encourage you to go to our website, commonsenseinstituteco.org. You can download these reports. We have a really cool animation that shows the funding status of the trust fund over the last months and actually includes some projections from the state as well. That should give you a better sense of really how this pretty important financial institution here in the state has changed and what the outlook is. So, we recognize that there are immediate problems and immediate economic challenges and really immediate policy choices and that are imminent and remain very important. But this is one topic that I think deserves some attention and deserves to be better understood, and really as we look towards the recovery and we look towards the long term, and really as the legislature reconvenes in the coming weeks, this is a topic very important because it has direct costs and tax implications for businesses and for employees, really at the end of the day, for years to come. So let's really get into it and give you a sense of the overview and the connection here. So don't need to introduce probably all of you to the turmoil that we face in the economy over the last 10 months. It's really incredible to think that it's been 10 months now since the start of really the more severe economic shocks we felt. And as we've faced various public policy measures and as we face historic increases in job losses, we've seen unemployment insurance claims spike never seen in our state's history. And this is really the point of the trust fund, to fund those unemployment insurance claims to support individuals as they leave work and as a means to transition to something long-term, something more sustainable long-term. Now, so we saw the worst of the economic shocks in March and April. We saw fairly strong recovery, but in November, Colorado actually started to take a turn for the worst, and job losses began to actually accrue, and then December was one of the worst months again on record. So this issue remains front and center and something that we don't know exactly what the long term will be. We just know that the projections remain very uncertain and pretty poor. So to give you a little bit of a snapshot of how Colorado ended the year, it actually ended up being the state with the second highest growth in unemployment rate. Fortunately, Hawaii beat us to the top spot, but it had the fourth highest percent impact in job loss in the hospitality and leisure industry. And virtually every week we've seen since the start of the pandemic, except for during the summer, and certainly in recent weeks it's upticked again, we've seen new initial claims, unemployment insurance claims on a weekly basis, higher than at the highest week during the financial crisis. So this remains an pressing issue. And I would, if you're interested in digging into these numbers, go to CDLE, their website, the Colorado Department of Labor and Employment. Encourage you to visit their website, and they produce great weekly reports that give you pretty in-depth look of not just the regular unemployment insurance claims that the trust fund funds, but also the federal programs and the extent to which we see claims for unemployment insurance programs and the dollars and industry. So again, I encourage you to go to CDLE's website and you can get more information there. So again, the trust fund serves as the mechanism to supply benefits, to pay for the benefits for those claiming unemployment, claiming unemployment. This is the way the system is supposed to work. However, the status of the trust fund, we are now taking in federal loans. So since August, the trust fund has actually gone insolvent. And as of January 6th, Colorado was one of only 17 states to have applied and started accruing federal loans. And actually was the 9th highest in terms of federal loans on a per resident basis. So in many ways, Colorado stands out, again, as a top 10 state in terms of obtaining federal loans. Now, in many ways, again, this is the way the system is supposed to work when we face severe economic shocks as we have. However, it's important to also understand that Colorado stands out for two reasons. One is going into the pandemic, the trust fund itself had an insolvency ratio rated at 78%, meaning the fund was prepared to handle about 78% of historic high demand, a level that at the time was perceived to be too low. And so as we've now seen, again, historic levels of new claims, and as the second point, Colorado stands out as having continued claims or ongoing unemployment insurance claims at a level higher than the national average. The trust fund, the amount of revenue in the trust fund simply was not enough to sustain, and in fact is now again accrued federal loans. So what is the outlook? Well, at the moment, the projections, and again, these are hard to pin down because of the uncertainty of how employment will look in the coming months and coming years, but the latest projections suggest that the fund will not actually start to be replenished. So it'll continue to draw federal loans, and the revenue being paid in through employer premiums will not actually start to replenish the fund until sometime in fiscal year 2022. So we're still more than 2 years away from seeing the funds start to be replenished. The premiums, we have a forecast through 2023, and the premiums funded by employer-based premiums, at the moment are projected to increase by about 22% on average over the next 2-3 years. But we know that the worst or the higher tax increases on employers will actually begin to accrue after this forecast. So we don't have real insight into that just yet, but 2025, 2026, and going forward, we know that the worst of the taxes to replenish the fund will really begin to go into effect. And so we don't know exactly how long it will take to not only begin to replenish the fund, but ultimately to get back to a level where we can be prepared for another economic shock. It could take another 6, 8, 10 years. Again, the projections at the moment are not official, but this will take some time and really incur very significant tax increases for. So, the bottom line is that this is a critical issue to understand today because of the long-term implications. The cost to employers, the premium costs to employers are significant and will have a large impact on the ability for the state to recover employment at a pace that I think we all want. We want a quick recovery, and ultimately, while there were some beneficial reforms that put off some of the surcharge increases for another year, over the next, again, 3-5 years, these tax increases will be significant. And as we debate other legislation that incurs direct costs on businesses coming out of the recovery, we need to recognize the premiums for the Unemployment Insurance Trust Fund and the impact they will have and consider them in the broader policy debate. I think this quote to me sums it up. This is from the Colorado Department of Labor's annual report on the Unemployment Insurance Trust Fund, and I just figured I would read this quote because at the end of the day, this I think sums up why we are focused on this research, why I think policymakers, advocates, those interested in ensuring we have a stable and robust and fast recovery to get people back to their jobs and opportunity to flourish again. This sums it up for me. So this was written in 2019. The 2019 annual report prior to indicated to timing, severity, and duration of the next recession, the Unemployment Insurance Trust Fund may again become insolvent and borrowing will be required to make legally obligated benefit payments. This will inflict substantial costs to employers in the form of various surcharges, administrative costs, and interest expenses. These will take effect at the same time the premium rate schedule shift to highest levels, thereby compounding the financial stress upon employers. And this is a situation we're in. It's something that was anticipated. We knew that would occur, especially given the severity of what we now face. And again, we have to we have to recognize these costs. Coming out of the financial crisis in 2009, I think there was, we look back and we want to ensure that we recognize that these. It takes a lot to dig out of the hole, and we don't want to be talking about this issue for another 10 years, which we may face. But this is one element that I think, again, legislators, we hope the public is aware of and understands the true cost again for years to come. So, thank you very much for your time and for tuning in. And we hope you join us and listen for the next one. And hope you have a great weekend. Thank you so much.